Hello and welcome to Simply inTAXicating. GST has crossed one major milestone with the GST Council, finally deciding the tax rates virtually for all the goods, numbering about 1211 items, and deciding 4 tax rates for the services. Naturally, the services being accounting for almost a major chunk of the GDP. So naturally, the GST Council has taken a very wise decision in terms of coming up with tiered system for the services. Now the issue is the industry and trade, which are virtually on the roll to switch over to the new tax regime, is facing certain issues with respect to transitional provisions. There are certain major areas of concern. We have 4 domain experts who are going to look into those areas of concern. Perhaps it will help the policy makers, the GST Council. We have Mr. M K Sinha with us from GST Council, who will take note of all the concerns, and the policy makers will certainly get back to the trade industry to facilitate it, as the Indian Finance Minister has been repeatedly making it clear that the government and the GST Council will take all the measures, all the steps to facilitate it. So we have Mr. Sumit Dutt Majumder, the former chairman, CBEC, with us. We have Mr. Sridhar, Senior Vice President, Hindustan Coca with us. We have Pratik Jain, our knowledge partner also, national leader, PwC, and we have M K Sinha from the GST Council, the Joint Secretary. So let me start with Mr. Majumder. Sir, please tell us, you have taken a look at the GST Act now. You have taken a look at all the chapters, you have gone through a little deeper rather, looking at transitional provisions particularly, the kind of issues which you have come across, industry and trade have been coming up, you have read about it. So how do you look at it?
Before coming to the transition provisions one by one, for which all of us will discuss, I just want to first tell you the importance of transition provisions, just to make the opening of this deliberation. You see, whenever there is a change, obviously people expect the changes for the better. Nobody opts for a change for the worse. So people's expectations are that there should be better things happening with the GST coming. Obviously, it will happen. But then what happens? People are not very patient. So this effect of the change must be felt immediately. And that's through the transition provision. Other things, it takes little time to settle to get the benefit. So if there is any issue on the transition with what he will do with the credit which he has had of all the existing law, what he will do with the inputs which he is having in stock, or the inputs which are in the same finished goods or the finished goods. What will happen when some services he has rendered in the existing law, but the invoices have been done after the appointed day. So all those concerns are that whether these will be taken care of or not. And here, if the administration fails, then it will be a matter. But I'm sure it will not fail, because the way transition provision has been done, if you recall, the first transition provisions are laid down in June 2016, and quite a few of them. But then, when I've been interacting with the trade and industry, and also my former colleagues through the training programs, all of them had pointed out that this has not been covered, this has not been, and it was reported to the GST, at the time GST Council was not there, CBEC was taking the lead, I have no hesitation in saying, and all the points were there, then they covered, and you got a much better version in November 16, but still certain things were there. And now what they've done, I think, in the thing, they've concised it, mainly covering the 4 sections. And I think there's quite a good job they've done, but still certain issues are there. I'm just making the opening. I'm sure Mr. Pratik Jain already he has said in other fora, I have heard it, very valid points he has raised. Mr. Sridhar also has raised certain things. So let us open
the... So before I go to Mr. Sridhar, sir, of course, let me go to Pratik. You have also collected huge amount of input from, various quarters. So what are the key concerns which you would like to articulate?
Correct. So on the transition stock, I think transition provision and transition stock per se. One basic point is that goods lying in the trade with the distributor and retailer, where they don't have the original excise invoice. So because they don't know, how much excise duty has been paid, because they have been purchasing the goods from the depot. They only charge, depot or distributors only charge VAT. For that, there is a provision which says that they will be entitled to claim 40% of the CGST as amount which is back from the government. Now that is creating a problem, particularly for those product which will attract 28% GST, and there are 19% of the overall product portfolio which will attract 28%. So there you have a loss of 8 to 9%. Assuming VAT rate is around 13-14%, you get 6% back, but still, 22 minus 14 is 8 to 9%. So, so what is happening is that is creating a huge problem in the trade. Lot of companies, a lot of sectors, people are destocking. They have stopped purchasing, and that is not a happy situation because that's creating a business disruption, right? And I suspect that will also be reflected in the excise duty collections and all that this quarter, because people are not able to make sale. That's one. Second thing which is happening is that people are taking registration as first stage dealer and second stage dealer for various depots and warehouses. Even large distributors are taking registration because they want to pass on the actual excise duty on the invoice. Right. Because the law says if you have excise duty paying document, then you can go ahead and claim the credit on actual. Now that is, I don't think was the intention of the law. And from FMCG to consumer electronics to durables, there is everybody is rushing to take a registration for excise, and that again is creating a problem. So I think what industry is expecting is this 40% deemed credit, 40 should increase to 60, 70 at least, particularly for those products which are taxable at 28%, to minimize the losses with the trade. And second, if there is some easy method to pass on the excise duty without taking registration, by mentioning the excise duty on the invoice and things like that, by tracking how much excise duty has been paid, that will be good. The third point is that there is some confusion that how do the retailers and distributor know that whether excise duty has been paid on this product or not, because the law says or the rule says that if excise duty was wholly exempt on that product, then I will not be able to claim a deemed credit. Right. So if I have bought the goods from SSI, or the goods have been manufactured in excise exempt zone like Himachal Pradesh or Uttaranchal, at a retail level, how do I know that whether this product was exempt from excise duty? So the understanding at least that we have is that if the goods are generally exempt from excise duty, which is there as part of the excise schedule, it is exempt, then you will not be able to claim a deemed credit. But if there is conditional exemption based on the status of the manufacturer like SSI or excise exempt zone, then this deemed credit provision will continue to apply. So that's one basic question on the transition stock which is coming in. Of course, there are other issues as well, and which we'll discuss during the course as well.
Okay, Mr. Sridhar, I mean, the destocking, the disruption, how serious?
I would say that it's not the question of being serious or the industry is expecting, but there is an element of ring fencing that the industry would do to ensure it doesn't go out of pocket. Let's say you're doing a brownfield expansion, and the brownfield expansion has got a scheduled delivery of products to come in. We are talking only of plant and machinery. Right. So the eligibility under the existing law is assured. The new law is also there. Now, if you look at the transition provisions for capital goods credit, it is not there. So there is a definite chance that between 20th of June to 5th of July or 25th of June latest to 5th of July, there would be a block of the work on a brownfield or a greenfield. Right. But the question is, I don't think so that 10 days would really affect. Only thing is, if a product has got if a project has got a critical path method already set right, then I think it has got its own implications, and that's one way of looking at it. Even in respect of the same point that Pratik raised. See, one of the options that the industry is considering is you take your depot as a registration. And start passing invoices from the depot. Let us say for some reason, the government of India postpones the implementation date to September because of various things. Something happens. Now, July, August or June, July, August, 3 months, somebody is going to ask for a depot registration. Is that congenial to government of India? If you see it from the reverse side. One, it's not colorable. I can ask for a depot registration even before 15 days the new law comes into force, because that is something, the sanction of the law, my commissioner will definitely approve it. But then, is that what we are pushing people to? So we can do it in a much more liberal way, because the government has been so liberal up to now. Increase the percentage, because the 40% in our opinion is totally underpayment. Fact is, if the government has got the duty, then why should I be treated as like a person who is indulging in evasion? I have paid my lawful duty. The concerned person downstream is my stakeholder. Unless he sells the goods day after tomorrow morning, as Mr. Majumdar correctly put it, I think this is the best point. I think the macro point is the best point. That if for a person who has no great influence on the economy, he is just a minimum 50 lakhs to a crore, and to him transition has hit him, then I think it's like saying the temple doors have not opened. Where is the question of meeting God at all?
Okay, let me go to Mr. Sila now. What Mr. Sridhar is saying.
I have heard their concerns, and I would say that those concerns are well founded, and they have come to government from other channels also, and perhaps the issues will get debated. It will not be possible for me to say as to whether these rates will or this 40% will change or not. But I would what I would like to point out is that you please see it from the perspective of drafting and when it has to be quantified. The goods are coming from 3 different channels in the market. One is those which are duty paid. Second is that which is coming from exempt sector. And the third one is what is unaccounted economy. You have to put some ballpark figure as to what is this ratio. And it is on this ratio that this 40% or 60% or 80% depends. And you can do any amount of study. It is virtually impossible to put your finger on exactly what is this ratio. So a particular percentage has been fixed. A lot of concerns have come from trade that this may not be adequate, particularly for those items where the rate is higher. So I'm quite sure that this issue will get debated and we'll get to know as to what is the final decision on this matter. This was a beginning point of the discussion. Coming to second point as to people are taking first stage or second stage dealer registration to pass on the credit. In law, there is nothing which stops a person from doing that, and perhaps it's a very safe course of action to take, and therefore very large number of industry and distribution networks where it is possible they are taking. But I understand that for small dealers or where the distribution network is very wide, this may not be an efficient way, and particularly when this will continue only for a short period of 3 to 4 months. There perhaps one of the solution is whether 40% can be tweaked, or can there be alternative mechanism of credit flow which ensures that without registration yet with adequate safety, credit can flow.
Be enhanced or something.
What is important to note here is that the entire credit flow is not dependent on any kind of verification. Trade has to take credit on its own, and it is on the basis of certain samples and few red flags that some of the credit flows will be verified. So I do not foresee any disruption in credit flow. Perhaps the issue is adequacy of credit flow, and whether that adequacy of credit flow needs to be addressed in relation to consumable goods in particular, because there perhaps the linkages break down, the largeness of the number comes into play. Coming to capital goods, that there is no transition provision. Capital goods flow is generally well planned in any large project, and I'm reasonably certain that trade and industry will be able to tweak their project schedule in a very minor way, which doesn't lead to any loss of credit. Perhaps capital goods can be received a couple of days before, or can be received a couple of days later, after the appointed date, if that much of minor adjustment has to be done.
Okay.
So with
I have a couple of points there. I mean, I think at some level it is unfair for the government to put up a law to say that while excise duty has been paid on capital goods, but just because that they're in transit, I will not give you the credit. I think there is a bit of an issue which industry would face, and if I have to change my project schedule, etc. I mean, again, this is causing disruption. The whole intention of this transition provision is that to minimize the disruption to the extent possible. Yeah. So just like you have giving credits for inputs in transit, why don't you restrict on capital goods? And on the first stage dealer, I think I completely agree with Mr. Sinha that it's a safe course of action. That's what we have been advising our clients as well. But the problem is that most of the companies are not able to change their IT systems now to pass on that credit, because from the depot or the warehouse, if they have to pass on the credit, so they are ending up issuing manual invoices.
Okay.
Which is creating a big problem. So every location, they have to have people, they have to raise those invoices manually, they have to record it separately. So it's a lot of hassle. So I think I sort of take that point which Mr. Sinha is making, that this is being debated. But if there's early action is taken on this by increasing the 40% to, let's say, 60-70% or whatever is deemed suitable, that will avoid a lot of pain at this point in time to the industry.
Right. Yeah, Mr. Sridhar. So, I mean,
Yeah.
this
No,
has
but
been-
I don't think so. There's need to prolong this whole
right.
discussion further. But then, if you
even under central excise law, I mean,
but if you see, let's say those people paying on capacity. Okay, there's a very interesting observation for people paying on capacity basis under subsection 6 of 140. So there, if you look at the industries which were put on capacity basis, then they had a particular history under the law of central excise. Why they were put? What is the reason? It was suspected of some wrong things happening there. So to control them, production based, controls were put. Now even for them you have allowed, to the extent of inputs and semi-finished stocks and you. But therefore, for industries which have not been, this is the last point I would like to make, so that, to conclude the theory, that if you have to compare industries itself and look at the actions that you have taken on which industry has handled, its compliance as well. I think maybe that would have been a better way of looking at it. But as Sir is correctly saying, that it is not possible to press a button and tell this is the best number. I think there it's a very fair point the government has.
but they are under constant watch.
They are
The
under
capacity,
constant watch.
You are not.
Yeah, they are under constant.
They are under constant watch. That is why they have been. That's okay.
There is one other point on transition, is that what happens to the credit which is there in the books of job worker. And because the law says that only that credit can be carried forward which is entitled to claim under GST.
Right.
And because under GST the job worker will not claim credit, it will be the principal who will claim the credit, who is actually purchasing the goods. At least the literal interpretation of this is the job worker will not be able to carry it forward. That will become a cost. So that's also, in FMCG, very common, pharma, etc., where you pass on the credit to the job worker. That could lead to significant amount of loss.
Okay.
For them, that's another area perhaps deserves a clarification or amendment in the rules to say that a job worker will also be entitled to claim credit.
Yeah, but there is one contra view in the industry about that. There is a provision that says also that if you have given inputs to a job worker, then you will be given 6 months time to get the inputs back. So many people are taking that if you have given 6 months time for me to get back the inputs, then to that extent things are valid.
Correct. But the problem is that if you are getting those inputs back, one of the other thing is, can you get those inputs as such? So there is a raw material there with the job worker, can he pass it on to you? But then the issue is, do you really need to receive it physically in your premises? Or can the goods continue to lie in the job worker's premises, or you have to open a warehouse where you will have to take it. So there are issues which are there. So I think the easier, perhaps, I would suspect that's not the intention to deny the credit there.
No, but if you say warehouses, Pratik, even that larger issue of people storing raw materials, other materials, packaging materials outside in large warehouses, because there is no space in the factory, and bringing the invoice and this to the factory doesn't mean that, because that invoice has been duty paid invoice, and only because of space constraint. Every factory, even if it's the best of the managed, has space constraints. So you hold large warehouses, the invoice lies there, and based on the 1 year limit, you bring in on a real-time system of inventory management, you bring the goods inside. Now, those warehouses would have to be cleaned up before 30th of June or 30th of August, as the case may be, and then bought in, because it doesn't appear so, as Pratik is correctly saying.
Right. Yeah, Pratik, what about the services, where the services have been rendered before the rollout?
Let me respond to both the questions, both the issues which they have raised.
Please.
One, Pratik has taken a very literal meaning of the legal provision. Okay. The long and short is, the principle in transition is this, that if the credit was available in the past, if the credit on input is available post rollout of GST, and it is at any stage of manufacturing or consumption cycle, then the credit should flow. Similarly, for warehouse, where the credit is where the goods are stored outside the factory, those were provisions which were relating to manufacture and perhaps would not apply so much in the GST era. But again, your credit loss will not take place. Whether it should be physically brought into factory or not, these are issues actually what Mr. Jain raised, and also the other issue of warehouse are not really something which will be provided in the law. These are issues which at best can be provided either by way of a circular or by way of a guidance notes. I'm quite sure that government would be issuing guidance notes on various issues where many of these issues can be addressed, and change in law may not be needed, either in the act or in the...
They provide for a deemed receipt, because the principle under the existing law is the receipt of the goods into the factory.
Right.
So nobody does anything that is wrong. If you want to, within the four corners of the law, if you want to, you have to bring the goods to the factory. Maybe for the transition alone, they may have to provide for a deemed receipt circular and make a declaration and bring it in.
Here the receipt will have to be either in your business premises or in the additional premises of the business. That is how you will have to read in GST, not the way you are reading for a factory. Travel beyond the concept of factory as GST comes.
Okay.
Services used to.
Yeah, services.
For services, I just want to make a couple of points. So there is one provision in the transition law which says that if I have sold goods under the current law, and if there is a sales return under the GST law, it will be deemed to be a supply by the customer to me. So that's a clear provision. Now, what happens in case of cancellation of my service invoice? I have raised an invoice before GST came in, but that is cancelled for some reason. There is no particular provision for that. It talks about change in value, and you can issue a credit note, etc. But it does not talk about complete cancellation of the sale, where the service has not happened. So will I have to then go back under the service tax law and claim a refund? And what happens if I cross that 90 days window for services? I think for services, there are fewer issues, thankfully. But that's one issue which came to our notice. There is one other issue which says there is a provision which says that if you paid VAT and service tax both under the current law, but the supplies happen after GST, then you will have to claim a refund of this VAT and service tax and then pay GST. So we are not able to really figure out in which situation this provision will apply. So those are two main issues for service sector which we have noticed as far as transition is concerned.
And one more last point I regards Jammu and Kashmir, which I think, which is all everybody is asking, is this as a general knowledge question. Once the Jammu Kashmir Assembly passes those respective bills by end of May or first week of June, will the CGST Act and the IGST Act then start saying the Act will apply to Jammu and Kashmir, or they will not say?
Because they'll have to amend the law, again have to go to Parliament.
So then because it still says it doesn't apply to J&K. Yes. So after that, then how does a person who's having, suppose if I have under the union excise regime, some stocks I have left for those people who have plants in Jammu and Kashmir, and stocks are there, balance are there. Some queries have started coming in the last 15 days. What will happen to the fate of those balances? Because this will not apply to them. So then what will happen to the balance as on 30th of June?
Yes, so you want to say?
The last, I think there are.
Yeah, he has read the questions.
Very valid questions.
Sinha,
yeah, either Mr. Sinha gives it now, or my one suggestion is that, even on the basis of my personal experience of interacting with the trade in the last 1 month or so, I've at least for 5 places I've gone. There are certain transitions still there which is not covered in the miscellaneous provision of 142. 142 covers miscellaneous situations, but to great extent they've covered most of the situations, but I think one or few more situations are there. So perhaps sometimes the people, they raise it in the seminar, but they feel shy to bring it to the notice of the, and it becomes too complicated to take note of the whole thing. So I suggest that if, since Mr. Sinha is here, so taking his advantage of his presence, perhaps some proactive measure in the next, we have 10-12 days before 3rd June, get the chambers to get any other situation which is not covered under 142. Then all those things, like this one, J&K question, Pratik has raised certain things on the services. So one exercise perhaps can be done on that.
Let me go to Mr. Sinha.
Okay, I'll respond to all 3 points. One, as to what happens if an invoice was raised before the appointed date, service is not rendered, and then the invoice is cancelled. Now, if there was no service rendered after the appointed date, obviously no GST will be leviable. So what you are left with is essentially a refund situation, which will be dealt in the old law. That seems to be the plain and simple interpretation of the law, and if needed, perhaps this situation also can be covered.
Just one point on that, sir. For sales return of goods, there is a specific provision that it will be deemed to be a sale by the...
Its services, nothing gets returned. If it has not been rendered, where is the question of any return? So there will not be any provision for that. Correct. Now coming to Jammu and Kashmir, first, whether this law will apply or not, at policy level it will start applying. For GST to work, CGST, IGST law has to apply for credits to flow seamlessly and GST to operate. Now coming to whether the legislative mechanism for that will be amendment of this law or removal of difficulty through presidential order or some other means which Ministry of Law suggests, is a question I will not venture into. That's for Ministry of Law. It will be taken care of. We are aware of this issue. Now, one more issue which you had raised in relation to services was?
The VAT and service tax paid.
Okay. Now, as Mr. Majumdar was explaining, there are many situations which are not provided for, and perhaps we should cover it in the law. As and when we get to know, we will provide for it. This is a situation wherein you are not able to find the exact example, but the law is already there. So the law has to cater to all kinds of eventualities. Examples will be provided in the guidance note. This is basically to ensure that there is no double taxation. If you have paid service tax and VAT before the appointed date, and thereafter if the GST also becomes applicable, the past tax become available to you as a credit, and then you use that credit to pay the tax, GST tax, whatever is applicable, and double taxation is avoided through that provision. That's the purpose of that provision.
So on this promising note, let me thank all my 4 guests and of course Mr. Sinha for making it very clear on a variety of a whole basket of issues. In fact, some of the issues, of course, the dim credit, etc., the industry and trade will always expect that it should be dealt higher, but the policy makers, the revenue gatherers, the politicians have to take into account various other parameters. Let's hope that they do justice, the fine balancing act which will probably please everybody. Then apart from that, the guidance note government is going to come up with, some of the issues will be clarified through circular, which will help the industry and trade overcome some of those doubts and grey areas. And guidance note, like most of the economies which have gone for GST, like Malaysia for instance in 2015. So that is going to help the industry understand a lot of areas, a lot of issues, a lot of concerns. Let's hope that the transition becomes less painful. Of course it will remain painful, but less painful, and the policymakers are very keen to facilitate and make it simpler and less painful. On this note, let me once again thank my guest, and stay tuned for episode 2 where we will touch other critical issues which are remaining issues of GST in next episode. Thanking you all for watching TIOL TUBE.